If all you are doing is saving money, then you are actually getting poorer. Yes, I mean it. You are getting poorer. Why? Because money sitting in a regular savings account keeps reducing in value. Inflation in Nigeria currently is terrible. And if that money remains in your savings account over time, it will lose value. The silent enemy behind this is inflation. Inflation is eating into the value of that money that you have saved up in your savings account. If, for instance, you have 5 million naira saved up in that savings account as of today, and that money can purchase, let's say, a plot of land. In 5 years' time, your money is still about 5 million naira, but that plot of land is now worth about 10 million naira. You can no longer purchase it. Who lost? You lost. Why? Because you were foolish enough to leave your money in a savings account without doing anything to ensure that the value of that money increases. The prices of goods and services are rising daily. The thing you were able to buy with 50,000 naira yesterday, you approach them today and then they tell you that, it's now 60,000 naira or 70,000 naira. Recently, I tried to find out the price of cement. And I was told that cement is now 12,000 naira for a bag. Now, just a few years down the line, I was buying cement for 1,200 naira. So you can imagine what the money I kept several years ago for maybe to put up a building, and I said, no, let me just save it up. Let me save it up. Once is enough, I can now start the project. What it means is that the money that could have bought 10 bags before can only give me 1 bag of cement now. That is the power of inflation. Inflation is eating deeply into the value of your money. So it will be very foolish of you to leave money in a savings account and nothing is adding to it. That's why if you are preparing for retirement, retirement is a time in the future. Money saved up today for that time in the future will be devalued, and by the time you get into retirement, there's nothing left for you to rely upon unless you are wise enough to put that money into investment streams that can multiply your money through either compounding or through capital appreciation. So that's why this video is for you. At this point, I would want you to pause and I want you to hit that subscribe button so that when next I come up with other videos, you will be able to see them. Particularly, I need you to ensure that you share this video to all those you know who need it. There are so many persons who are getting towards retirement, but they are going into retirement unprepared. And I'm here for you. I'm here for them. But I need you to partner with me to ensure that this message gets to them so that tomorrow they can thank you that you were able to bring the information across to them. There's power in knowledge. Ignorance is a destroyer. So there are various channels that you can use to ensure that your money does not just stay in that savings account. For instance, mutual funds. If money properly invested in mutual funds, after a period of time, look back, it has outpaced inflation. That's the strategy you need to adopt so that you are faster than inflation. Your money is growing at a rate that is faster than the devaluation caused by inflation. In this series of videos, I'm going to be showing you how to invest your savings in order to generate passive income and grow your capital, grow your investments so that with time, that money is able to sustain you in retirement. This video will cover mutual funds, treasury bills and bonds, and then investment in stocks and shares, as well as real estate investment trusts. These are some of the few strategies that we're going to be discussing in this video and in the next series of videos to help you invest your money rightly. Let's start with the easiest and safest entry point, and that is money market mutual funds. What is it all about? A money market mutual fund is like a pool of funds put together by various investors and then placed in the hand of experts who can trade with that money and invest that money so that it can yield, dividend, it can grow, and then each investor is able to get back their monies with interest. This pool of funds is managed by professionals who are able to put the money in short-term financial instruments that can yield interest. The monies are usually invested in Treasury Bills, in commercial papers, in fixed deposits, and all manner of investments which they consider safe and profitable. So instead of you struggling to invest your 500,000 naira in any of these vehicles, you can put it in a mutual funds where it joins the pool of funds that have been put together by millions of other persons, and then the money amounts to billions, and this amount is invested and is able to produce profit, is able to generate profits. And by the time the money is shared, each person is able to get a portion of the profit commensurate to the amount that they have invested. It may sound like something technical, but no, it's not. It's very simple. And in this digital age, there are several apps that have been put in place that you can, download on your phone. And through these apps, you can access money markets mutual funds. You can now, a wallet is created for you within the app, and you fund the wallet with the money you intend to save. And by the time you invest that money, the money begins to generate income almost immediately. It begins to grow. Some of the apps that you could consider are Bamboo, Trove, Risevest, Cowrywise, and I also recommend the Stanbic IBTC mutual funds. All you need to do is to get on your phone, download these apps, sign in into the apps, give them all the necessary details that they require from you, and then of course you now fund your wallet in the app and ensure that your money is properly invested in the mutual fund of your choice. But I recommend money market mutual funds. Most of the money market mutual funds available are able to grow your investments between 10 to 20, sometimes 21% of that investment per annum. And then over time, through compounding, the profits are added to your initial capital, and so there's capital appreciation, and then its ability to yield interest would also increase. And over time, through the power of compounding, your money begins to grow astronomically. Let's be practical. Let's say you invest about 500,000 naira in a money market mutual funds at an average of 10 to 15, or let's say 15 to 20% per annum. After 1 year, you are likely to have about 550 to 600,000 naira as the value of your money. That is the initial investment plus the interest that has accrued on that money over time. Now, after 3 years or after 5 years, that money will keep growing. Why? Because each day your money is put into some form of investment, and then it is generating returns, and your money is making money for you. That is far better than leaving the money sitting there, sitting fallow in your account and losing value due to inflation. Now, money market mutual funds may not grow your money astronomically overnight. Why? Because it's a safe form of investment. It is slow and steady, but then your money is able to outpace inflation, and it keeps growing. And you can imagine, if you keep adding to that initial investment periodically, maybe monthly you add something, maybe weekly you add something, over time through compounding, you'll be shocked at how your money will grow. This is not a get rich quick scheme. It is investment, but it takes time. Money market mutual funds are usually low risk and low returns, but then you get something that is better than leaving your money in a regular savings account. And it is ideal for beginners. They don't give explosive returns, but they keep growing and they outpace inflation, so that the value of your money is not lost. Rather, your money appreciates in value compared to money that is left fallow in the savings account.